Hey everybody, Tom Gentile. I want to welcome you to our summer series for Optionetics. This is going to be a three-part series. Tonight, what we're going to talk about is just calls, puts, and trading the Darknet signals. I also want to go into stock selection, and we're going to revisit the last time we were all together as Optionetics students, which was back in February. If you remember, February, one of my weeks, I was actually out in New Zealand. But I want to revisit the energy opportunities because, basically I want to say you're welcome. And you'll know why when you see what it is we did and how those turned out. We're going to discuss, like I said, we'll talk about Darknet. Today is a great day to be discussing this because we had conversations with a group of our partners just yesterday, and we were talking about the fact that the market was ready for a reversal and ready for some sort of relief rally, even if you want to call it just a relief rally. That we were seeing a lot of up and coming darknet trades just before they were happening. These channel collisions, and I mean we were spotting them everywhere, mostly in indices and mostly in financials. I saw a lot of them in financials and even some retail. But I got some time. I'm going to show you that tonight. Lots we want to cover over the next 3 weeks. I'll get into it in just a moment, guys. This is a live session. Joining me tonight is Jay Harris. He's with me on almost every single one of these things. Jay, good evening to you.
Good evening, Tom. How are you, sir?
Or good afternoon, I should say. You're rush hour over there on your side of the.
That's it. We're on the, as you say, sometimes the wrong coast, the left coast, but we're good.
Yeah, doing good, doing great here. I mean, I'm really long a lot. I've got some short stuff in my portfolio. I've got some
Sure.
long stuff, and I got some long stuff that really is value, where I've just gotten beat up bad. But I've been using what we're going to be talking about tonight as to spot these opportunities. Guys, live seminar we got going on right now. I'll get the recording out to all of you as soon as I possibly can. Let's see what else. You can ask me questions. All right. We got a lot of people on tonight, so if I don't get to your question, I apologize. It's not because I didn't want to ask it. It's just there's no way I could ask all these questions and get this seminar wrapped up in an hour. Last thing is that you see the disclaimer on the screen. Really, this is here for both of us. You can read it in its entirety. All you got to do is hit pause when you get the recording. 2 points I want to make. Stock and options trade has large potential rewards, but also large potential risk. The other thing I want to mention is myself, Jay, everyone associated with Tom's Trading Room, Optionetics, etc. We are here as educators. We're here to show you how we trade through our various parts, either spotting opportunity, creating low-risk trades, trading, executing, and managing those trades. But we're not personal investment advisors. We do not give specific trading advice, and everything I'm going to talk about is in US dollars tonight, unless noted otherwise. For those of you who are back with us for the first time in maybe many, many years, you may know me. I've been probably trading longer than I haven't. In fact, that's actually a real statement. I've been trading longer than I haven't. I'm a co-founder of Optionetics. 300,000 students. We've gone through the halls of Optionetics, several books on the industry. Yes, been on CNBC, still continue to be Bloomberg, Reuters, Fox Business, and more. And you know me as the founder and editor of TomGentile.com, Optionetics.com, and Tom's Trading or TomsOptionTools.com. I want to make a quick statement here. We are in the first week of June. All right, it is 2019. It is very hard for me to imagine that 7 years ago we lost my trading partner George Fontenhills this week, and I did not want to let this opportunity go by to let everybody know that I miss him. I think of him every day, and I think he'd be very happy with where we're going and where we've gone with the company, with Optionetics, with us acquiring the company back. And we got some really, really great things happening that are going to be coming down the pipe later this year. for Optionetics, and I'm going to hold it at that. But I just want to let everybody know, George, you're out there. I know you can see us and hear us, and we're thinking about you, buddy. So for those of you that are returning students, welcome back. We still offer lifetime reattendance. The majority of that is online. But I love where we've gone from the time Optionetics started to where we are now, because now you don't have to get up and you don't have to come to a hotel or a conference center to see us. All you have to do is flip on your computer and connect, and we're here. So we have that. Our platinum service has now turned into tomsoptiontools.com. All right, you can check it, all the things we've done there. We have taken platinum and put it on steroids for those of you that are brand new with us. And we're going to be showing you some of that tonight. And in fact, those of you that know and that use Darknet, we're actually going to show you where the future of Darknet is going very, very soon. We've got some new stuff happening, and we'll talk about that before the end of the night too. All of our Optionetics classes are free to Optionetics students and alumni. We do have premium education, including mastery and partner programs that are available to a limited number of students each year. When I get to week 3, I'm going to talk about something I do once a year called our System and Trading Mastery series. All right, I do this one personally. I do it once a year, and I'm going to be doing that starting in July. I'm not going to talk about it right now. We'll talk about it during week 3. So our Trading Essentials webinar series will be weekly webinars from 8 to 9. This series is going to be on Tuesdays, tonight, next Tuesday, and the Tuesday after. Again, like I said, recordings will be made available and emailed out to everybody following the live event, and handouts. So what I'll do is handouts for tonight will be my slides. I will make sure that you get my slides. We'll put them together and package them up as PDF files. I'll have them available for you in the email that follows the live series tonight. My agenda tonight is going to be calls and puts, finding cheap and expensive options in the Darknet strategy. And I'm going to show you how we find cheap and expensive options. If anything, I'll just, you'll have them in the recording so you can see what's cheap and what's expensive right now. Next week, we'll do a review. We'll talk about spread trading and trading with a money counter. And then on week 3, I'm going to talk about weeks 1 and 2. We're going to take George Fontenille's 5-minute success formula. All right, and we're going to turn that into the triple threat trading system. I'm going to show you how we build that as a trading system. That's my plan. So let's start off with a quote. And I showed you guys this quote back in February, and I usually change these around, but I really like this one. Benjamin Franklin said this: an investment in knowledge pays the best interest. All right, and it's important for me to say that because if you're back, or even if you're new with us, you haven't been back here in a while, you're definitely going to get some knowledge from us over the next 3 weeks. The first piece of knowledge I want to give you is, what stocks do I trade? Well, these are the 3 areas I go to cut my stocks down from the 20,000 plus that are out there. About 4,000 of them are optionable, but I don't trade all 4,000 of them. I probably trade less than 10% of those. In fact, I'm in the top, maybe about the top 8% of options, and the reason, or optional stocks. And what I do is I break those down into market liquidity, stock mobility, and are they short-term optionable? All right, those are the 3 areas I go. And to do that, we only really need to look in 2 places. Number 1, go to the cboe.com or cboe.org. And when you go to that site, you're going to see an area, or which is called the penny pilot list. And that's a list of downloadable stocks that have bids and offers inside the 5-cent spread. All right, so that is the best way to get the list that I trade. All right, there's another way you can get that if you go to CBOE and you can't find it. Is an even easier way to do it, and that's simply use Google. And you go to Google and you type in right there the words penny pilot program. When you do that and you hit that little search button there, you're going to see this pop up, and it's going to say CBOB hybrid penny pilot program. If you click on that, that'll take you to cboe.org, and actually takes you to the penny pilot program page, and that'll pop up and it'll look something like this. And right here underneath the words penny pilot program, there's a blue hypertext that says click here for a .csv of penny pilot classes. If you click on that, it will open up, or it'll download that list, and you can open that up in Excel, or you can open that up in Numbers, or any type of spreadsheet that you're using. It'll pop that open, and it'll give you the symbol list, and it'll give you the stock name, and it'll give you the denominations that it trades in terms of strikes as a penny pilot option. By the way, there are only, I think there are about maybe 400 of those, all right? 300 to 400 of those, 400 if you add the ETFs on top. So my big list is basically that less than 10% of all optional stocks. So what I do is I take the penny pilot options, and I take options that are weeklies, and I combine them into one list. And that gets me down to under 400 stocks that I follow. Okay, that's the plan. The plan is to get that list down to something that's manageable. And even the list when it's at 400 doesn't mean I'm going to have 400 trades. It means that's my starting point, guys. That's the starting point that we have here. All right. So, why do we trade options? We all know this, and I'm not going to spend a lot of time on this. All right. We trade for control. We're controlling a block of stock for a much less cost and risk. We also trade options to protect our stock or portfolio. Maybe we trade options to protect a group of stocks, right? Some of us also trade options as a way of protecting options that we're long, and that's spreading options, right? Maybe we're buying puts to protect calls, straddling our options. But in any case that we're doing here, what we're trying to do is we're trying to hedge off our costs. We're trying to hedge off our risk. That might be directional risk. It may be non-directional risk. In either case, what we're trying to do is create a trade that has lower cost, lower risk, and lower stress than simply buying the stock. And if you want a good example of where options made a lot more sense than the stock, you do not have to look any more than a lot of the stocks that are in the NASDAQ right now. FANG stocks, Amazon, for instance, that dropped, what was it? Dropped almost 100 points on Monday, all right? And then what did Amazon end up doing today? I mean, it had a rally today, but you know, if you were to take a look at AMZN, and I'm looking at it on my smartphone right now, so it was up 36 points today, 36.87, and so you know, not as much as the drop down that happened, but still, again, having options gives you a much better situation than owning the stock, especially if you're in a stock like Amazon or any of the FANG stocks that we've seen. Two types of options I want to talk about tonight. We're going to talk about calls and puts. I'm really going to stick to the call side for the most part, but that's not to say that I may not find a put play. In fact, I'll more than likely be talking more bearish with you next week. But we're going to stick with mostly on the call side. Gives us the right to buy specific stocks at a specified price for a specified amount of time. Puts are the opposite. They give you the right to sell a specified stock at a specified price for a specified duration of time. All right. So if you're new to call buying, and most of you in here are not, so I'm going to the folks that potentially are. You know, the three questions you might ask yourself when it comes to buying calls are: how many options can I buy? Can I buy options at different strike prices or different prices? And how much time do I have my option? And that all comes into contract size, strike prices, and expiration. So contract size in the United States and in most areas around the globe, 1 equals 100. That means that one options contract is good for 100 shares of stock. Now, there are a few countries in the world that still operate in the 1 equals 1,000. And you might be thinking, wow, I'd love to be in that country. They get one contract for 1,000 shares of stock. Keep in mind, if that's the case, those 1,000 shares of stock in most cases are less than $5 a share. So they're trying to find a way to make that small dollar stock have some leverage to give you a reason to buy an option. I mean, think about it. Who would buy an option on a $4 stock when the stock's only $4? Not that many people. But if your option was good for 1,000 shares of a $4 stock, then it might make sense. All right, strike price. So the strike price is the price that you agree upon between the buyer and seller. It's also the price that the buyer can exercise the option contract for, right? So as an option buyer, you can exercise. Now you might wonder, well, what's the percentage of people that actually exercise their option contracts? It's very low, all right? It's less than 10%. Over 90% of all option buyers sell the option before it gets to expiration. But there are some reasons why you would want to exercise your option contract. One would be if you simply want the stock, all right, and you bought the option as a way of getting getting into the stock at a specified price and not having to come up with the rest of the money during that time frame. So if you bought a 3-month option on a stock and you really wanted to buy the stock, but you didn't have the money to put down on the entire stock, but you had enough money to lock the stock up at a certain price, that's a reason someone would buy stock and then deposit money into their brokerage account before you got to expiration and either exercise the stock or went into what's called auto exercise. All right. There could be a tax deferment by doing that as well. If your option went deep in the money and you were thinking to yourself, well, let me exercise this and I can defer my taxable gain until such time that I sell the stock. And again, I'm not a certified public accountant. So, I'm not making any statement that you could save on taxes by doing that. That's between you and your accountant. But there are people that exercise their options for that reason. Okay. Next, expiration dates. I remember when Optionetics started, we only relied on one day a month, and that was the third Friday of every month. And the argument in the seminars and the live seminars, they used to be, is it the third Friday or the third Saturday? And you'd always get somebody that stood up and said, well, it's the third Saturday of every month because that's what it says. And that might be true, but here's the problem. Try calling your broker up on a Saturday and asking him to exercise an option for you. All right. Well, since then, we've gone into auto exercise, where even if you're a penny in the money, your option could get exercised. We're back in the good old days when we didn't have webinars. You may have had to been in the money by 25 cents before you had an automatic exercise. Now, getting out of that, a lot has changed in the last 27 years, right? 27 years? 26 years. 26 years ago, Optionetics was founded. And so now we have options that expire every Friday. We have options that expire on Wednesdays. We have options that expire on Mondays. We have EOMs. Those are end of the month options. They expire on the last trading day of the month. We have quarterlies. We have leaps. Which are best? To me, which are best or which ones have the most volume? Let me tell you. Now, and I think for the foreseeable future, the third Friday of every month is still the most anticipated, most option that trades the most volume. After that, you can look at weeklies. After that, you could look at the Monday, Wednesday options. And after that, you would look at EOMs, quarterlies, and leaps because they have the least amount of volume in them. So to me, which is best? That's a double-edged question because it really does depend on your outlook, what you're using to determine where that stock price is going and how long you expect it to get there. That will help you determine what type of an option expiration that you use. We're going to discuss what we use shortly. Definitions. All right, in the money is when your option has mostly real value. Out of the money is when your option does not have real value, that's when the strike price is above the stock price when we're looking at calls. And at the money is when the stock and strike prices are the same, but still you have no real value there. All right. Now, volatility. Volatility is the speed of the stock relative to its time. There are two types of volatility we use in predicting stock movement. There is present or past stock movement. We use statistical volatility. And then implied volatility gives us present option pricing. So I want to show you very, very crude ways of looking at this. All right, so before I go any further. So let me pop over real quick to my other computer. All right. Should be coming back online here. And I'm going to log in. And I want, yeah, you see it? Great. And so what I want to do is I just want to go to some option rankers. All right. We're going to mess around for 5 minutes or so, and I want to just show you guys some stuff. So how can option traders get an idea of where a stock is likely to go? Well, that's with implied volatility. So let's take, oh boy, Snapchat. Snapchat's a cheap stock, isn't it? $12.95. Okay, we'll use Snap. I have a bullish position on Snap. So I'm going to go out to June 21st. Let's update that. Now the reason I'm looking at now, June 21st is that third Friday in June. Okay, it's going to have the best liquidity in it, but I want to do this, and I'm going to blow this up. Jay, let me know if the screen is blowing up in price.
It is.
Perfect. So the stock closed at $12.95 today. So it's close to 13. So let's use 13. The June 21st 13 calls are trading at roughly 57 cents. Okay, take the calls and take the 13 puts, which are at 63 cents. Now, if we add those together, is it safe to say that we're above $1? Yes, it's actually about $1.20. So if you take the call and the put and you add those together, that near money call and that near money put together, we've got $1.20. You know what this tells me? This tells me that option traders expect Snapchat to be $1.20 above or $1.20 below the $13 price tag between now and June 21st. All right. That's a good way of coming up with what I like to call a crude standard deviation. All right. As these numbers grow, they expect the movement of Snap to be even greater. As these numbers drop, they expect the movement of Snap to drop a little. All right. So really what we're looking at is Snap is going to stay in about $1.20 range most of the time. All right. 68% of the time, perhaps, between now and in the next 2 weeks. All right, next 2.5 weeks, excuse me, it's only Tuesday. Let's take a look at one more. So I'm going to bring up Amazon. AMZN. Same thing, only this time I want to look at Amazon's June 21st options. Now, Amazon's been moving around a lot. All right, now in Snap, to give you an idea, Snap had a volatility of it was around the mid 50s. Now, Amazon's volatility is also in the it's in the low 50s. I see the IV over here, the implied volatility in the 50s. But take a look at this. So the Amazon stock was at $1729.56. We're going to call it $1730. $42.65 for the calls, $40.14 for the puts. So we're really looking at about 82, let's call it $83, above and below the $1730 strike price. So you got 83 bucks. So 83 bucks above 1730, 83 bucks below 1730. So we're really talking about the range is around 160 points, roughly 165 points between now and June 21st. All right. You might say, wow, 165 points, that's a lot more than it is for Snap. Well, the stock's trading a lot higher than Snap. In fact, the stock's trading, what is that, 99 times higher? Snap's trading for, this is $1,730. Snap isn't even at $17. So when you look at these things, you have to look at the relativity, of the actual, so Snap actually has higher volatility because of its range than Amazon. All right. I didn't just prep this before class. I mean, literally, guys, I've had a long day. I had to travel last night out of town, got in at 2 o'clock in the morning, back up at 8 o'clock this morning, been at it with the markets ever since. Meetings I got going on, just finished those up at about 7:30, long enough to take a little break, get my computer running, get things going, and here I am. So I haven't had time to prep a whole lot, but I am showing you a look over my shoulder as I'm looking at these things. So that's one way of looking at volatility. The other thing I can do is, instead of just picking out things, why not look at what's the cheapest options, the cheapest options in town, and what's the most expensive in terms of what option traders feel like stocks are going to do. So what we do is we actually have rankers, and I look at pre-computed implied volatility ranks. Now, take a look at this. I'm going to blow this up for you too, and I'm going to blow it up even more. So this is a 1-year ranking. All right, so think about this like weather. All right, if you were looking at weather patterns, there are certain times of the year where our weather is near all-time highs, and sometimes weather can be near record lows. Right now, Kraft Heinz Company is near a 1-year high on its implied volatility. All right, what's Kraft Company been doing? Well, it's been falling apart. All right, if you take a look at the stock, it's fallen like an anvil. And even Warren Buffett's saying, I got this one wrong. All right, because it's been falling, there's a fear factor going into Kraft, and everyone wonders where's it going to be from one day to the next. That's why you've seen the volatility go for last year. The low was 19, the high was 41. It's actually doubled its time premium, its options premium that extrinsic value has doubled in price between the low to the high. Sienna is up here near the high. Now, when you look at these IVs, current IV 3908, yeah, that's high. 57's high. Look at these two, Signet Jewelers and Stitch Fix, 107 and 104. FFix, that's a big one. That's a big number. It makes me want to go look at it right now and see what's going on with it. Well, Stitch Fix was a $16 stock back at the end of the year that became a $38 stock that's now right back down into the low 20s, right? But look what else is happening. The earnings are coming out in one day. Now look what happened the last time the earnings came out. Boom. We went from 26 to 30, as high as 38 before coming back down on the end of the day. That's a big move. Guess what? They're expecting a big move to happen tomorrow, but no one knows really where it's going to go because they had good earnings back in November. The stock dropped. They had good earnings back in March. The stock popped. They might have good earnings again, all right? Earnings might actually, may be good, may be bad. But again, there's not enough of a pattern here that traders can try to figure out where that stock's going to go from one point to the next. It's a guessing game, right? But it's a guessing game where options traders have decided, I'm going to put myself, because we've blown down in earnings and we've blown up in earnings. Look at what's happening as we're getting closer to the earnings. We're getting this widening that's saying, it could be, option traders got it pegged as low as what call it 17 and as high as 31. That's a big wide range from where it is, right? But you guys get the idea of what we did here. All we did was we went to options, rankers, and we did a pre-computed ranking. You can see the most expensive stocks. Take a look at some of these. A lot of these are, you got some retailers in here. Here's Five Below, real retailer. You got some energy. Halliburton. You've got National Oil Well on here. There's Lululemon down there. It's expensive as well. And these are all stocks that their options are inflated. They're expensive. All right. Well, what about the other side? Well, come on over here and let's click on cheap. All right. Cheap. Wow. Here's some oil stocks that are cheap. Sunoco, Anadarko, Spectrum. All right, let's see if there's any more that are on the oil and gas area. Nothing I see right away, but then I also see Celgene and Array Biopharma. So you got some pharmaceuticals in here, Tandem Diabetes Care. These are all cheap right now. Take a look at Sunoco for a moment. The high volatility was 35, the low was 1684. The current is 1684. It's on its low for the year. So if you like Sunoco or if you hate Sunoco as a stock, if you're bullish or bearish on it, this is the time to be a buyer of options because they're cheap, right? Same thing with Anadarko. Same thing with Spectra Energy and anything else that's on the low end of this list. All right, so I wanted to deviate a little bit and show you give you some ideas of how we look for cheap and expensive options. But this isn't the only thing we look at. All right, because the very first thing that we like to do, and what my mantra has been, and what my mantra has always been, even back with Optionetics, is what? Spot the opportunity, create that low risk trade, and plan, execute, and manage the trade. And that's what we do. So Jay, before we go into spotting opportunity, creating low risk trades, and planning, exiting, and managing trades, do you see anything on the Q&A box, or are we just hemming along great and it's time to start looking for trades?
The latter. You're hemming along great. It's time to start looking. But I got to tell you, there's a lot of positive feedback when you were mentioning George. Everybody that was on here from back in the opportunity stage just had to jump on there and offer their sentiments as well towards him and how much they miss him, how great you're doing, and carrying the torch and such. So thank you guys for all that positive feedback on that.
Yeah, and I want to echo to, Jay's comments. Thank you all for your comments. It's too bad. He left way too early. He left way too early. He had a lot of plans, and it's just too bad that they just didn't come to fruition. And part of me thinking about this too is that this month I turned 54 years old. I'm part of me says, oh my gosh, 54, I'm feeling it, because I mean, when I got above 50, all of a sudden I didn't have the pep in my step I used to. So now I gotta hit the treadmill. I gotta hit the bike. I gotta do things that I didn't have to do before. But also, I look at 54 as, all right, you know what, I've learned so much. I got so much more to learn. And as far as I'm concerned, and my wife has anything to do with it, I'm going to be around a long time. And that is my plan. And I see that, Robert, old fart, try 63. I love it. I love the comments you guys are throwing at me here. All right, let's get into some trading. So let's talk about Darknet. Before I do, I want to review the last time we got together talking about calls and puts. We were discussing the energy cycle. If you remember, any of you who was with us here when we did the February series? Remember, we started right around the beginning of February and we ran through the end of February. Was anybody here when we were doing the February series? We were talking about the energy cycle. If you remember, we were talking about XLE. We threw some energy, some oil stocks out there as well. Those worked out really good. Even with the drop in oil already, if you followed the rules, you had to be in good shape. I'm going to show you what I'm talking about. So remember, we talked about the energy cycle. We're out of the energy cycle. Energy is done for this year. All right. And, we talked about this pattern running up that 10 to 15%. We talked about a case study we used on week 1 back in February. We were looking at XLE. It was around $63. And we were looking at about, around that 10% run to the up. And we were looking at these call options. And if you remember, the 63 call was trading just under $3, right? And we were looking at the 63 call. We also looked at spreads. We looked at butterflies too. I'll get into those next week. Just want to talk about the call. We talked about the fact that, what we'd see with the stock at 63, about a 10, 11% ROI. And with the call at 63, we're looking at that on the top line, 125% ROI. And then we talked about the risk graph and the right to buy the asset where you had limited risk, you had unlimited reward. And then I showed you this, and these were the details of this trade back on the 7th of February, 2019. And here's the trade, and we were looking at that $3 limit. And so what ended up happening, all right? Remember my mantra, I said, you look to get out of at least half of it when it doubles in value. Well, here's what happened. This was your trade date on the 8th, and look what ended up happening. This was around April 28th, I believe, was the trade. At that time, there were only 59 days left in the trade. But look, that $3 option became 605 by 625. That's about that's anywhere from 101 to 108% return. That was just on the XLE calls we discussed. I'll come back and we'll look at the spreads next week. All right, but I wanted to show you that. And we can trade puts for profit too. And I'm going to actually look at puts next week, and I'm going to look at put spreads next week because I have some things lined up that we'll discuss next week as far as trading opportunities. All right, just remember, puts, they have the same characteristics, but they just increase in value as the stock price decreases. So let's go ahead and talk about Darknet. Darknet Signals, this is our contrarian trading strategy. And, although we love Elliott Wave, Darknet is similar, but because it is a contrarian trading strategy, where it differs is, number one, you don't you know, I don't boot up any software. I don't follow a lot of the more complicated patterns. Our signals are very steadfast. That means that when you see a signal, it never changes. It doesn't change if the chart changes. It stays the same. It takes the winners when they're winners. It takes the losers when they're losers. Darknet is a buying only strategy. Another reason I'm not looking at puts tonight. So what we determined with Darknet and its channeling is that the contrarian bullish signals are much better than the bearish signals. And we have had a fantastic year so far with Darknet Signals, right? I talked about this in February. Q1 was great, was fantastic, the number of winners to losers. The Darknet system starts with what we call channel collisions. And channel collisions are where you see three channels coming together in certain areas. And this is what I love looking for, is an upward channel, a long-term channel, that sideways channel, and then the short-term channel, and they're all hitting support, support, support. Right now, the software will take a look at that, and it might deviate it slightly, but it's found what it calls a tolerable area for bullish signals. Right now, in our software, it might look like this, where it replaces the channels with where the actual signal takes place. Where we get a buy and a sell. This is a buy. This is a sell. This is a buy. I want to show you a more recent signal. All right. These come together, and what happens is we get those active signals, and they get popped up. And not only can I look at the stocks, but I can actually look at potential call trades as well, and I can rank them by different areas. So last week or the weekend, I sent this out to you. All right. As part of the registration, I saw a Darknet stock on Campbell Soup, and I sent you an email with Campbell Soup, and I think we said something in there that this stock might heat up your portfolio. And a lot of you opened that and looked at it. Look at where it's been since the email went out, because the email went out, and since then, this stock has gone up quite a bit. The buy signal came around 35.5. When I sent this to you, we were up above 36, and we jumped above 38, 36, I think, today. And this was earlier in the day. I'm not sure where it closed at, but we can find that out real soon. Let's just pop on over here, and let's go to stocks, charts, stock charts, and let's go type in CPB. That's Campbell Soup. And make sure I'm looking at that right area. Yeah, it was close to where we were at that time during the day. But the one thing I do want to show you is look at where the call options are in just a few days. The calls were trading right after the Darknet signal, the close of the Darknet signal at 168. And today they were up anywhere from 72 to 90%. All right, so just in a few days. And this is Campbell Soup. This was not tech stocks rebounding. This was not financial stocks. This was not the indexes. This was good old boring soup. So, Darknet trade. I want to go through some Darknet case studies with you. And when I talk about Darknet, I'm going to jump to the actual software here for the next several minutes. And to do that, I want to go to our Darknet home. So, Darknet, we also call it ALF9. Gives us the ability to look at stocks. We can also look at Darknet calls. We can look at Darknet spreads, and we can even do back testing, long-term back testing on our Darknet signals. Our Darknet signals come to us when I click on search. I have the ability to go in here, and I went ahead and ranked and searched all the penny and weekly stocks, because there were a lot of Darknet stocks that came out today. But when I searched on pennies and weeklies, it got me down to about 30 stocks. Now, of those 30 stocks, I'm looking at them with filtering, right? Between 40 and 80 deltas. I want to look at a maximum of 300, although I've never seen 300 Darknet stocks at once. And I'm looking at call option trades as of right now. The other thing I'm doing is I'm looking at option slippage at 2%. I can actually change that. Let me change that to 1%. So it's better be less than 1% if I want to look at an option trade. That just gives me more and more stocks that are efficient. All right. So if I look down here, I see 29 stocks that fell in that range. I can even go even deeper than that, but we'll get there in just a moment. Now, Darknet, the channel collisions can happen a couple of different ways. And if I look at, for instance, channel collisions, let me go to stock charts again. I want to show you something. Take a look, and we were looking at these like crazy the other day. Dow Jones Industrial Average, DIA. All right, so upon first glance at DIA, you see it going up, and it starts to roll over, and then we had that pop. But look here, we can actually, with our channel testing, we can go out there and do a channel test, and look at this. Do you see this? This is what I'm talking about, folks. Long, intermediate, short-term channels all colliding right down in this area where we saw that very close to colliding all three. That's what I'm talking about, where we're seeing channel collisions happening. All right, I'm showing you the foundations of it, but Darknet does all the work for us. So when I come across here, I see, oh, there's DIA, there's SPY, all right, they're on there. I'm amazed QQQ isn't on here, DJX is on here, but I got several different signals. And what I do is I go through these and I look at them and I try to look for that cream of the crop. What I mean by that is that I can go and look at, with Darknet, I can look at different signals. This is Wynn Resorts, right? Wynn Resorts is conflicting to me because for the past week or two, we've had bearish signals on Wynn Resorts. What I mean by that is that I've had money counter, which we're going to look at next week. That's a pattern that looks at actual time, has been bearish. Here's Whirlpool. Look at the big move on Whirlpool that popped up. Now, again, I get three different types of signals. I get an actual stock itself. That's a buy signal. All right, so if you look at Symantec, Symantec had a buy signal today. It had a buy signal. It had an R, which is a rebuy. But I get buys, I get rebuys, and I get add-ons. So Darknet can give me up to three signals in the same stock before exiting. Most of the time, I see one, right? When volatility goes up, we'll sometimes see two. Every once in a while, we'll see a third signal. But I can also look and see, well, with Symantec, how did it do in the past? Well, here's an 18 to 22. Here's an 18 to 20. And then here today is another $18 buy, all right? Nike has a rebuy. So it had a buy signal at, 82? It had another buy signal down here just below 80 today. And I can move along. Bank of America. Bank of America had a buy signal and now a rebuy. But I'm also interested in seeing how many Bank of America, Morgan Stanley, ETF, E-Trade Financial is on here. Looking along, let's see if I see anything else. Is that BK? Is that a bank also? Bank of New York Mellon, XLF. That's the financial sector. Moving along, American Express. They're not a bank, but they're almost a bank. They do better than banks. Look at that chart, by the way. Buy and sell signal on American Express. Nice move, and another buy signal today close to its 52-week high. All right. Then I also see SPY on here. Some of the most liquid stuff. Buy signal on SPY. I've been long SPY. I'll let you know. I started getting long late last week. Right. I didn't know there was a Darknet signal coming up till today. Now I feel even better about my late last week because I was in it right over. So this is Tuesday, Monday, Friday, Thursday is when I got into it a little bit more. I scaled in right here. So now I'm starting to see the fruits of my labor on SPY. But now I feel even better because now it is a Darknet buy. All right. But what I'll do is I'll go through these and I'll start to look at them. And then after that, I'll look to create that low risk trade. So spot the opportunity. I think SPY is a great opportunity only because it's liquid, but would DIA be a better opportunity? Let's take a look. I mean, it still has the same range pullback. So in that case, I'm going to look at this particular ETF, SPY. So there's our stock opportunity. If I come down, I can also look at opportunities ranked by percent to double. And as you see, SPY is number 3. The only thing above it is Anadarko Petroleum and iShares Box High Yield something, all right, HYG. Probably don't want to go with HYG, although I'm not going to throw it out yet until I take a look at it. So let's take a look and see HYG. There it is on the list. And, you know, it was an $80 stock as a rebuy that went to 84. Here's the $85 buy right now. I mean, it could get up there for sure, and it does need a lot less of a movement in order to get to where it's going. So we could look at that. The June 28th 83 half calls. If I just click on this, gives me an idea of what I might want to look at. Right, going to cost me $222.50. Here is the risk graph. The worst that could happen if it goes down, and then where's my double? Where can my double occur? Well, it looks like we got to be at about $88 for the double to occur. Where are we at right now? $84.91. So we are looking for about a 3-point move in this stock. It moved 85 cents today. Remember, it was a big day today, so it's going to need to move a little bit more in order to get to that point where we would see a double on this. All right. Let's go back to Darknet for a moment. Let's go look at Anadarko. So Anadarko, I'm just going to take a look at these three stocks. Anadarko, we're looking at here is the June 28th 69 call for $1.70. I'm sorry, $1.90. That's $190. What we'd be looking for, again, is for Anadarko. If Anadarko got back up to where the red line is here, all right, this move here, and the earnings are occurring in 56 days, so we're not going to see earnings before this trade comes off. But what we could do is we could see a double if oil makes a comeback. Oil's going to have to get back and start moving back in a relief rally move. If we see that, then we could definitely see APC double in value. And then, of course, there is the final chart I want to look at tonight, and that is the SPY S&P. And by the way, I'm going to give you guys a little clue. S&P is also a money calendar buy, so that's why I'm really liking this one. But here's the thing with SPY. It's not cheap right now, all right? So if I look at SPY, the June 28th, the 274 calls, they're $8.89, all right? That's $889 for the position. Now, for me, and I like to follow this rule is that I like trades that are $500 or less per contract, right? And if they're more than that, then I either look for something else or I try to find a way to make that number go down. So we could spread this. I'm going to talk about spreads next week. But pulling that aside, all right, we do have two possible candidates. We have HYG, which I wasn't even going to look at tonight. But because it has the lowest percent to double, and it's a $2.23 stock, looking at that June 28th 83 half call, it's got some good slippage in it too. It's not that bad, 15 cents. All right, buying that for if you buy that for 225, for instance. All right, we looked for that to double in value. That means that if it got to 450, you take it off. Second trade was APC, and that was the June 28th 69 call. Again, we're going to run the entire month of June on these. $1.90. This one is at $1.90. Let's call it $2. All right, $2 or better. If I could get that $2 or better, then I would look to get out of that position if it got to $4 in price. That would be a 100% return. Okay, so that is the two trade case studies I want to show you with Darknet. Now, let's talk about some updates we got going on for 2019. And Jay, I'm going to have you pop on here, and why don't you tell everyone, just spend a couple minutes talking about the updates that we see that are going to be coming very, very soon for our Darknet traders.
Do you have the capability to go back to your tools page?
I do.
Okay. Real quick, guys, we are incorporating Japanese candlestick patterns with the Darknet signals. Some of you guys, maybe even most of you guys, have Japanese candlestick charts up, but you're not really using the patterns and looking for the reversals and continuation patterns and such. But what you guys that do trade Japanese candlesticks know is, A, it works best if you combine the candle reversal patterns with Western technicals. So you take the Eastern technicals, candlesticks, the Western technicals, which we're going to consider Darknet a Western technical. So on that Darknet page there, where you see that middle box where that blue search button is, the trade type displayed line item there, you click on that, and generally you would click on call option trades. There's going to be a new line item that's called bullish candle reversal patterns. So it's going to have the call option trades list, but only if it also has a Japanese candlestick bullish reversal pattern. So one of the great things about Darknet is you could take, all these thousands of stocks out there, whittle it down to the handful that work for Darknet, and then get it even further whittled down to those that have a Japanese candlestick reversal pattern on it as well. So when you have the Western technical and the Eastern technical on the same stock, that's kind of one where we'll pin our ears back and really kind of favor that one over the other. Second to that, we are looking at some back testing, and I talked with one of our programmers today. We ran through some of the initial back testing that they've done, and some encouraging news here, Tom. We ran it on the Dow 30. We just did the past 365 days. So it's taking like the first 6 months of this year, last 6 months of last year. We ran it on the Dow Jones Industrial Average, and with these bullish candle reversal patterns with the Darknet signals, they're coming in right now at about a 63% clip, win versus loss. Now, think about that. If you have a one-to-one reward to risk system, you need to be better than 50% win versus loss. If you're risking 100 to make 100, you've got to be better than 50% to start showing a profitable system. Well, this is coming in not only at 62.7 or 63%, but the reward to risk, Tom, is 2.8 to 1. That's almost 3 to 1 reward versus risk on this. So not only is it better than 50-50, it's pretty robust in the risk to reward on these as well. So as we get these further fleshed out, guys, that's what's coming down the pipe.
Fantastic. Thanks, Jay. And the other thing I want to mention is, I've seen some questions popping up. How do you filter this down even more? This is the Darknet list right here. Look at all these trades. This, I'm typically used to seeing a few of these, but when you get the market doing what it did over the last week and then it hooks today, that's what's happening. All of a sudden, all the chickens come out to roost. So what you do is you lower down your risk, your stocks. So maybe you go from Darknet stocks to S&P 100. All right, S&P 100 stocks, the top stocks in the S&P 100. All of a sudden now we're down to 12. And then if you look at that, look at these. These are all really good potential slippage. And now what we've done,
tighten up your slippage search and filter it down by that.
Exactly. And what we did was we got rid of some of the boring stuff, and now we're left with American Express, IBM, Comcast, but you're also left with some big percent of doubles. So you got to be a little more realistic when you do this, and you got to think to yourself, well, gosh, if these percent of doubles, which they used to be maybe half this or now twice, maybe we don't need to shoot for the moon. Maybe we need to look for a 50% move before we exit and move on. It's something I want to mention to everyone too, but 4.30, 4.68, 1, 2. The first 4 trades are in the wheelhouse of the $500 or less. Union Pacific's a little bit high, but then, we got a couple more here, a couple banks, and then on down the line, there's Morgan Stanley, Nike, and Oracle. But the reason why you're seeing these higher than normal is because they have higher than normal volatility, implied volatility right now because of what's going on with the market. But I wanted to share that with you guys. Couple other questions and comments that I saw here. Let's see, APC, John, Amin, you guys are right. APC, and again, I'm going to say it one more time. I have not I didn't prep this tonight. You're seeing it as I'm seeing it. And so thank you for reminding me. APC is kind of in that takeover activity right now. It could move higher on takeover activity, but it might not too. So that might be a reason to step aside on that one. All right. And then, you've got your back testing as well. You can back test each of these stocks. Joe had mentioned that TBT's on that list as well. But TBT had a big drop. I don't know if you guys had a chance to see that one. But let me bring back up the pennies and weeklies list. All right. So I've got pennies and weeklies. And if I go ahead and do a search, and then come on down and you can see there's TBT, but take a look at TBT's chart too. Wow. I'm not saying that, this is going down. All right. TBT's has been dropping. This means that the bond market's been moving higher. All right. I do think that bonds are ready for a rebound, but one of the things I tend to do is I tend to skip something where the beginning of the chart was way up here and the end of the chart is down here. I have a trouble trading against that trend. So that's why when I'm looking at something like an APC, I think maybe it might have been APC. Let me make sure I click on it. No, that's not APC. That was a little bit of a weird one too. How about HIG? I mean, look at the chart. It's higher here. It's higher near term than it was farther back. American Express, I believe, is the one. Yeah, this one's nice. I mean, running in that trend real nice. The 10-period moving average has pulled back to the 30-period, but now we've got that buy signal coming up. I like to see pullbacks in uptrends. I just think that they're stronger. They're stronger stocks, and they make a stronger case to me as a trader. All right. Let's see. Any other ones that I see here on the screen? Let's see. John saying that he has Tom's trading tools. Does you automatically have Darknet, or is there an extra subscription? It depends on what level of service you have, because we have different levels of service. But John, tell you what, you give us a ring. Give us an email, support@tomgentile.com, and ask that question. And if you do not have it, then Jay, why don't you see to it that John, if he doesn't have it, let's give it to him for a trial period so he can play around with it, because it is really, I wouldn't want you to not try it out for yourself. And for all of you, the same thing holds true for those who are brand new with us. If you're brand new with us, we can get you set up on that for a week. Get you trying it out. This is a great week to be trying it out for sure. And Tony, I completely agree with you. Jay and the team, they're very efficient in answering emails. We've kept this group to our Optionetics group, and anybody who happens to stumble in here, we're welcome to have you. All right, but we're not out there advertising us to the moon, and because of that, we're able to get your questions answered for you on a timely basis, and that's our plan in the foreseeable future, is to continue to try to give you guys access to us to help answer questions. So, let me move forward and tell you a little bit about homework tonight. So we discussed a couple trades with you. All right, make sure Campbell Soup is in that group, because we brought that up earlier or over the weekend. Also looking at APC. That's another one we want you to look at and follow, and any other ones that you saw in the Darknet group tonight. You can watch the Darknet videos. We have at tomsoptiontools.com, we got our free video section. You can see the Darknet links there. And of course, any new subscribers, we have free trials available at tomsoptiontools.com, that 7-day free trial. And you can take a look at any of our levels. We got option trader, we have contrarian trader, which is where Darknet is, and then we have the complete trader, which is the money counter. Darknet is the whole ball of wax. I'll be talking a little bit about that next week. All right, Jay Bird, any final comments for the night?
Did we want to discuss anything on crypto, or is that coming in the future weeks?
You know what? Let's talk about crypto and on our I'll tell you what, cryptocurrency, guys. You had to have started hearing about it again. I mean, we had Bitcoin was trading at 9,000 last week. All right, now it's moving around a good bit. It's being pulled off a little bit, but we'll talk a little bit about crypto in a couple weeks. I've got something really, really cool I want to discuss with you in 2 weeks' time that have to do with crypto. Really cool stuff that I want to discuss with you guys. It's, in fact, let me just put it to you this way. I've never done this before, and I will never do it again. And you got to be here in 2 weeks to find out what I'm talking about. But it does have to do with cryptocurrency. And cryptocurrency, there are, with Facebook now jumping into this, with the rumors that Amazon is working on a cryptocurrency for merchandise, that's starting to fuel the Bitcoin, and it's starting to fuel other cryptos. I can tell you right now, with our cryptos and with the way we're looking at, we've had a really good year with cryptocurrency. In fact, I think we're 19 and don't hold me to this. I think we're 19-0 on our closed out crypto trades, And so I want to show you what we're doing, how we're doing it, and more. And I'll do that on. I'm going to put that into my week 3 session, which will be in 2 weeks. And it might take a little bit longer for me to get through, but I definitely want to talk a little bit more about that. Maul's asking, how do we manage the delta of our portfolio? You know what? Let me get into spreads next week, and let's talk about how we balance that out for as the whole week. All right, we'll cover Starbucks next week as well, and we'll talk about cryptocurrencies. Some of them that are on hype. We'll talk about cryptocurrencies that are based on something real, even gold-backed cryptocurrencies. We will be getting into as well, guys. All right. Hey, thanks for joining me, guys. Our time is up for the evening. Tune in next week. We'll do a review of week 1. We'll talk about, next week we'll talk about spreads, vertical debit spreads, and we'll also get into trading with a money calendar. And thank you guys for all the great comments. Have a great rest of your day, evening, morning, wherever you are joining us. And we will see you next week. Recording will be coming. Thanks again, guys. Take care. Bye now.